Particular program, the first topic I have taken how to identify most important support and resistance after a single day rally or a correction. Single day rally or correction, that also I will define how you can know that. Second, how to do the option writings during this volatility scenario. Most of the people, they want that option premiums they need to pocket, but there are specific process to do that. So that is my second topic. Third, in the month of April, so April we have conducted two programs, two free programs, 1st April, then 14th April. So this month of April, Nifty, Bank Nifty pair trade, how many opportunities it has given and how much people can get from that, that also we'll discuss. GAN trend change date for the May 2020. Using the GAN software, I will show you for the Nifty, Bank Nifty, as well as for the other couple of counters. So all these things we'll be learning today. And today the mode of communication will be in English. And tomorrow, the same time, 5 to 6, we'll have the mode of communication in Hindi. So I'll request all of you at the end of this program, please give your review in the Google review so that others also will get encouraged to participate such kind of free events. So today's program will be witnessed by near to 312 people. So those who join, they can get the benefit of the live program. Those who do not join, they will get the recordings also. So this is about today's program, and exactly at 5 p.m. I will be starting and it will go till 6 p.m. Many of you are associated with the Smart Finance for a long period of time, and many of you are newly experiencing Smart Finance. So this particular program is going to benefit the existing member of Smart Finance as well as the new participants of this program. So the 4 most important studies what as a trader you must do, that is the decorum of this particular program. Today the concept will be explained in English and tomorrow I will be explaining the same concept in Hindi. So now coming to the topic, VIX, based on this VIX, how to interpret this VIX to determine different things. April 1st also we had a program, so it was a 2 to 3 days program. So that videos also you can find it out in my YouTube channel. How to identify market bottom using the VIX and Fibonacci. Many of you have witnessed that. So today is the day we must reintrospect what we have learned on that day and how far it has worked. So this is the calculations we have done. So on that day, 12,430 was the high. It was happened something in the January, and VIX has touched 86 point something and 83.6075 was the closing basis. That was on the March Sunday. So we have calculated the bottoms and the midpoint of bottoms. So this is one of our bottom from where the market has started reversing, just couple of points above that. So 7511. So above that it has started reversing. On that very day, I have also calculated your reversal points. From once it is reversing from here, which are the price points it will encounter or touch in between. So the reversal once happens, to which point it should go. So one of our calculation was 9808.20, and if you can see here, Nifty has gone till 98 closing basis 989856. So 9856 or 57 level it has gone. So from there we are encountering a downtrend, and this 9857, so this also I have just downloaded. So 985759 level, this has come on the 30th April. 30th April you have encountered that. So in fact, we have taken the reference from our calculated low. So these calculations, once we have done, we have whatever we have calculated, 7463 is our bottom. From here we have started the calculation. However, market has not completely accepted that low. Rather, market has made a low of, Nifty has made a low of 7511. So this was on the March. So March 7511.1. So 24th March, Nifty has made this low. So if we just take this, make a small change here. We have calculated this from here. We have calculating all the reversal. Actual is 7511. So if I just replace this, you can find it out exactly where the reversal is happening. Just 25 paisa from our point. So this is the thing what you have learned on the 1st of April. 1st of April, the calculated bottom, and from there, if we are finding out the reversal is happening at 9857 level. In fact, the calculated bottom has not touched properly. The other market has accepted it differently, and based on that market acceptance, if you replace that bottom 7511, you are coming exactly to the 9857. So this is the one of the testimony that volatility index or VIX work properly to identify the trend. So VIX is a VIX is a part which is works properly. The concept of VIX, which we have learned on the April 1st, 2020, that has proved today that how far it is, these calculations are correct. If we are going with our calculated points, then also the reversals has happened 9876 level. But if we'll just take these changes instead of our calculated point, if we'll just replace it with the 7511, so we'll get the exact point from where the reversal has happened. So this is the most beautiful part of the VIX. So so you can visit that recordings, Dinesh ji. So this just to show that how far Nifty could have sustained above 9808, then it could have seen 10,533 also. So that also role of this VIX we are going to learn. So whatever we have learned in the 1st of April, it was an entirely different part. And today I am going to teach you a new concept of VIX. How you can take benefit of that concept. So that also we are going to learn today, one new role of VIX, one new concept of VIX. So volatility index, it represents the volatility of the market, and it is being calculated in a very complex way using the index options, and VIX is only available for the Nifty index. For bank index you do not have a VIX. For stocks you do not have a volatility stock index. So VIX is only available for the Nifty index, and this gives you the early signal of trend completion or the trend change. So that is early signal it gives. And I have told you on that day, just to recall your memory, all these ratios 0.236, 0.38 to till 888 and more than that 1.236, those Fibonacci ratios are being utilized for trading and investment purpose. But when you go with the higher ratios, Fibonacci ratios 1.272, 1.618, so those are known as the inverse ratios, 2.618. So those ratios are being utilized for finding out the tops and bottoms, and these ratios are applicable when your VIX is above 50%. So these are the things I have told on that event. So now coming to our today's discussion. So here, how to identify most important supports and resistance after a single day rally or fall. VIX is a great subject. If you little concentrate on that, many new things you can able to understand from that. So 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 this particular program, you are going to learn one more use of this particular VIX. What is the VIX other use? A single day big rally or fall, once it happens, then your immediate attention goes to what will be the supports and resistance. So what is a single day rally or fall? So that you need to define first. So any day, the price close above the 1.618 Fibonacci retracement derived from its previous day VIX and closing price, that is known as a single day rally or a fall. I'll show you in a Excel sheet also. So 30th April, you have 9859.50. VIX on that day was 33.99. So you need to find out the support and resistance. So here it comes to, it is a single day rally. How it is qualifying to be a single day rally? So that I'll be explaining in a Excel sheet. So I am just going to the 30th April. So this is the 30th April 9859. So just concentrate on these calculations. See how I am doing this calculation. So before that day, my price was 9,533. I'll be multiplying these things with the VIX divided by square root of 365. So this is all things I'm doing to get the daily price range from the VIX. The entire result, whatever I will be getting, I'll be dividing it by 100. Why 100? I'm dividing it by 100 because the VIX is 33.83, where 100 is already multiplied there. So to bring it back to the price range form, so I'm doing that. So 169 points of price range based on this VIX on 29th April. So here I'll be multiplying this thing with 1.618. So this is my Fibonacci ratio. So if the price close above this 273, I am adding with the 29th April last closing price. So if the price close above 9827, I will say that it is a single day rally, and if the price close below the 9279, I can say that it is a single day fall or a correction. Single day rally or a single day correction is being classified the day the price close above 1.618 retracement level of the VIX price range. So that is known as your single day rally or a fall. So when such kind of rally or fall happens, it immediately prompts you to find out what is the immediate resistances and what is the immediate supports. So that is the job of our things. And this single day rally and fall happens many times. If I can just, here you can see from the January to till date, if I can take. So here you can say, if I just see how many days the single day rally or single day rally or fall happened, you can see that many days will come. Many days. There is a single day correction, then single day rally followed with single day correction. So these two also recently happened 30th April and 4th May. So post this rally 30th April, so we are going to calculate the immediate resistances and immediate supports what this particular counter will encounter in the coming days to come post 30th April. 30th अप्रैल के बाद में जो दिन आएंगे उसमें क्या क्या सपोर्ट एंड रेजिस्टेंस बनेगा. Means there is a single day rally happened on the 30th of April. Now post 30th of April, what are the resistances and supports we can get? That is our aim to calculate. So now I am just going to the calculation part of that. So for calculating that, so first what I am taking here, I am taking the VIX. So VIX of that particular day when that single day rally or fall happened. Then I am taking the closing price of that day. So if I just take that thing, I am using three Fibonacci ratios: 0.786, 1.236, 1.618. I am not using 0.618 because 0.618 to 0.786 Fibonacci retracement is known as the death zone. So here, so I'm just taking the price range 0.786 times of the price range, again 1.236 times of the price range, 1.618 times of the price range. After taking these things, I'm just adding it with the 9859 and same way I'm subtracting from the 9859. So my first resistance after touching this 9859 will be 999.7.76, or you can say 9998, and my first support will be 972. So once this support is being broken, then I can go for the 9643. If this support is broken, then I can go with the 9576. That should be the third support. If this third support is being broken, then subsequently I'll be going for a second cycle. Second cycle starts from 9584. So the second cycle starts with 9584, which is nothing but 9722 minus 137 points, and 9426 and 9292. This is the second cycle. Third cycle will be starting much before the second cycle starts. You can say 9446, 9426, 9008. So this is the levels you can get. So if you can just go through this support calculations, second day it is a single day rally happened, followed with there was a correction. Next day there is a correction. Next day there was a correction, which is on the 4th May. That is also a single day correction. So single day correction, you just have a look here, 9293.5. So this is your calculation. Second cycle's last target you have achieved. So if I can go with the same logic here, second day also a single day correction, so I can change these values. Here, and I can also change the VIX on that day. So I have changed this. Now my all next things are coming. 9126 support, resistance 9460. So this is the resistance 9460, then 9556, 9636. So this is the resistances, these are the supports. Just go back to this data. 4th May we have calculated. From 5th to 8th May, what are the things happened? 5th to, I have just put the 5th to Nifty spot. 5th to 4th May, this is gone. This day we have single day correction. From 5th onwards, we will see. There is a high 9451, one of your resistance. Much before that, it has come back. Then you have all highs 382, 276, 366, like this. It is all below this 460. Nothing is above that. Then you have come with the lows 190, 190, 116. All are mapping to this level. So 116, just couple of points you have come below that. It could have come to the 930, 894, like this, 175, 238. So these are the price points you got. And now these levels, if you just go for, so it is coming 205, 270. This is the closing levels, 251. So you are neither in the support nor in the resistance side, and you are in between that you are hanging. However, to say that resistance you have touched once, support also you have touched once. So very feeble stage of your consolidations is going on. You are with the consolidation. So now the key points to make here. The day there is a single day rally or correction happens, on that day, what is the VIX, what is the price it is closing. These two things you have to take. Find out the price range, daily price range. Daily price range, how to find out? These two you multiply VIX with this divided by 365 square root, divided by 365 square root, entire thing divided by 100. So you will get the price range. VIX multiplied with price divided by square root of 365, entire result divided by 100. So this is going to give you the price range, which is visible here, 212. Once you get the price range, multiply with 0.786, 1.236, 1.618. Once you get all these three price ranges, add it with the last traded price and subtract from the last traded price, and your subsequent resistances and supports you can get it. Now question comes, how I can use it? What is the point of using this thing? So first thing is, once this kind of analysis you have done, you need to wait for the one support to break out or one resistance to break out. That means it must cross this level 9126, though it has crossed once here, or it should cross 9460. Any one price it has to cross and sustain below that, at least for half an hour to 1 hour period. If 9126 below it goes and sustain there for some time, you can think of selling the Nifty, you can hedge the Nifty, and you can go for a first cycle termination target of 8949, or you can go for a 8606, or in the most bearish case 8262 also. For the buying side, if it is crossing 9460, maintaining above that for half an hour to 45 minutes post this single day correction any day, then you can think of buying Nifty along with a put option also, and your aim should be first 9637 level, or second cycle you can aim for 9980, third cycle 10324. So this single day events always has a great meaning for a trader. Whenever this kind of rally or correction happens, the VIX changes rapidly. The change in the VIX happens very dramatic way, and you must take benefit of that. But for that, you must be very carefully look into your first resistance and support. So first and resistance and support. and it is not for intraday. Not for intraday. You can take it as a positional trade along with the hedging, but these are not for the intraday. These are not the bet for intraday trade. So if you sell it 912611, your stop loss must be 9460. If you buy at 9460, your stop loss should be 9126. So you must hedge it. So this very idea of using this concept is when the VIX is very high or VIX is compressing due to one rapid price action, you must take benefit of that also. And you can form many option strategies along with that. That also I'll tell you in the next part of presentation. One more thing also you just try to understand. All these calculations, whatever we are doing, many interesting things, phenomena happens in the market, but many times as a trader we restrict ourselves only to the stop losses, only to our small petty profits, small profit or small loss, whatever we get. So for that only we are occupied so much, we do not so we do not think beyond that. One interesting thing I will be showing you, and you all should keep it in writing. All must keep that fact in writing, and you yourself will tell me that how far it is true. As per Gann's one basic literature, when we go for the price to price squaring action, so Gann says that history repeats in every interval of times, and that interval is already set in the history. Again I repeat, history repeats in every interval of time, and that interval is already set in its history. Many of the Gann's original literature, if anyone would have gone through my 45 years experience in Wall Street or Tunnel Through Air. Tunnel Through Air is a very mastic book. You can't able to understand anything. So you will find out this one fact. I am going to show you that facts proof also here. Here you just have a look here. Nifty made a low 24th March. All of you can able to see this. 24th March, this was the Nifty low happened. So Nifty low and to the recent reversal. Recently it has reversed from a level of 9889. This is the reversal date 30th April. So 24th March. Note down these dates. 24th March to 30th April. 24th March to 30th April. 30th April, that is 24 trading days. This has happened a history now. 24 trading days you can find out. 24 trading days, and this low formation day, if I can take it out, 24th March as the bottom. If I count starts from 25th March, then it is almost 23 trading days. So the low formation day, if I can take it out. This low happened from a January high. January high, so which has happened at 12,400 and odd here, 20th January. If you can just take this thing, 20th January to that February, 20th January to that 23rd, 20th January to that March. March, whenever we had that 7,511. If you can just go through this, it is 46 trading days. 46 trading days, divide it by 2, it is 23. So if you count that day also, 24th trading days, from a high you form a bottom, bottom, you form a bottom in 46 days, 46 trading days, and from this bottom you form a top which took 23 trading days, 23 to 24 trading days. So 24 trading days you can take. So if from that bottom you start counting 24, the 12th trading days, 12 trading days, 6 trading days, because it is forming a 50% of timing relation. 12th trading days, 6th trading days, you will find a bottom the 12th trading days, you will find a top in the 12th 6th trading days. So very carefully note it down. So if I can take this date into account, so when this particular high has happened, which is 30th April, 30th April. So if I can just 30th April, I can still count from 30th April. So to till 8th, I have 6 trading days are gone, 6 trading days are gone, and I am left with another 6 trading days. So the next bottom you can find out on 3 to 5 18th. So the next bottom is expected on 18th of May, 18th of May, and from here 18th of May, if it only timing relation we are establishing 18th of May, if we can just count 6 trading days, so including 18th also, 3 to 5 and 6, on 25th of May you will get the coming top. 25th of May also you can get a coming top. So this is also one of the first timing analysis method of WD gang, which is price to price squaring action, historic price with future time relationship. Many of you, those who are having my book on the Gans method, just have a look on the third or fourth chapter, historic price, historic price with the current time relationship, timing forecast, how to find out a top and bottom. So the earlier top to bottom, it has taken 46 trading days, and from this bottom to the remaining top, it has taken 24 trading days, which is almost half of this thing. So almost near to half of these things. So in the 12 trading days, it is maintaining a 50% retracement. So 12 trading days from here. So 18th of May, you can find out a bottom. 25th of May, you can expect a top in the Nifty. So this is also one of the simplest calculation of the 18th of May. You can expect a bottom or the saturation of the downtrend. From here, by 25th of May, you can see one uptrend to start, and that uptrend is going to saturate by 25th of. So fine. How to benefit from the option writing during this volatility scenario? So the volatility used to be in its peak as and when the single day rally or fall happens. Single day rally and fall. So recently you have experienced two things has happened. One, 30th April, second, 4th May. This recent experiences. Nifty touched 9860. So this is a single day rally. On that day, forming a net credit call spread. Very carefully listen. You are going to get option writing. You are going to aim from here. Form a net credit spread along with a 2/1 ratio spread. So I have chosen 9,000 and 9,500. So why this strikes is being taken when that Nifty was at 9860? The reason is between this 9,000 and 9,500, I have a 500 points gap, and I required 75% of this value, 75% or near to 80% of the value, near to 400 rupees credit if I am getting, I should take it. So For that reason only 9,000 and 9,500 call I have taken. If you want different strikes, you can take, even though you can take some strikes with 200 points difference, but the criteria of this qualifying criteria is 75% of money should come to you in form of credit. Means there is a gap, 9,000 to 9,500, 500 points gap is there. So roughly if you take 80% of that, it comes to 400, 5% less from this, so 425 if you can less, minimum 375 rupees if you are getting a credit, you should take this. And this is the credit you have got, means this much of money has come to you. Now there is a loss part is there, there is 125 points of loss is there. To manage that, we need to form a 2/1 call spread based on the nature. So one call will be selling, two calls will be buying, and buy this calls two lots. So two calls will be buying, so two calls will be buying, so call buy two lots. So here too also one qualifying criteria is there. So the call option what you are selling here and the 10,100 call option what you are buying, the selling call option must recover more than 80% value of your buying call option. Very carefully you listen to this part. If you do not listen this part, you can't able to understand this part at all. So again I am repeating here, when there is a single day rally or fall happens, that gives a immediate spike to your VIX. VIX is going to change drastically post this event. So post this single day rally or correction, VIX is going to change in the coming days. VIX is going to change in a very great way. So to benefit from that, we are going to form a strategy or a plan to benefit from that. So for this 30th April, I have Nifty has given a single day rally. So I am forming a credit call spread. So my criteria or the qualifying criteria of this credit call spread is whatever the difference between the strikes, 500 point difference I have taken. For example, say I must get minimum 375 rupees as a credit. 75% of credit value should be there. I will accompany this strategy along with a 2/1 ratio call spread, provided the selling call option should give me 80% value of the buying call option. So if that is the criteria, I should take, or else not. Now going back to my Excel, I will demonstrate two times in a very short interval of time it has happened. So I'm just going to demonstrate that the same strategy here. Whatever I have told you, 388 on 30th April when it has happened, 388 rupees. Out of, so I was expecting 375, I am getting 388. At same time, if I'm selling 9,800 call option and buying 10,100 call option, so this strikes you can just adjust 10,000, 10,100 must be higher. Two lots if I'm buying. So here I am spending 362 rupees and I am getting 332 rupees back from 9,800 calls sell. So my qualifying criteria, selling call option should give me the 80% value of more than 80% value of my call options. That is correct. Here the spread, but I have credit spread I have formed. This credit spread also should give me minimum 75% of value, and more than that I am getting here. So this strategy is being formed on 30th April by looking into these conditions. What has happened to this strategy? As on 8th May, 4th May, there is a drastic change. You made 92 rupees profit in this spread. you lost 27 rupees in this, and all in all the loss and profit, if I can take it out, so loss 2000, profit 6900 in this credit spread, 4800 profit on 4th May. This has expanded, gone till 6500 on 7th May, and this is the result of this strategy. On 4th May, condition also have changed. 4th May, the situation has changed. 4th May also qualified to be a single day fall. 4th May also, so 4th May also is a single day fall. Single day fall. So these two also, same way I am forming a 10,000 put and 9,500 put. To remind you, on that day 9293 Nifty has come. 9293, this level Nifty future has come. So Nifty has come, not future, Nifty has come. So if I can just qualify this thing, so 500, 75%, I require 350 rupees minimum. So I am getting 315 rupees, less I am getting. So here too also, if I buy this 9,300 and 9,700, so this two also, it is not coinciding with my idea. So what we have to do? So this particular situation, what we have created here. So here what we are doing, spread is same. Second day, 4th May, spread is the same. 9,000 net credit spread we have formed. So 10,000 put and 9,500 put. This part is same. But when it comes to the hedging this combination along with 1 2/1 ratio, that is creating problem. We do not get any 2/1 ratio spread which is suiting to our requirement that the selling side should compensate 80% of the buying side premium. So that part it is not othering to, not accepting, because of the sudden spike in the VIX. VIX also has gone to 43.48. So what I did here on that particular day, since this is not qualifying to that condition, the spread remains same, the spread has remained same, but this 2/1 ratio spread, which was a earlier case, it was a long ratio spread, I made it as a short ratio spread. Means I sold 8,700 put option 2 lots and bought a 9,300 put option 1 lot. 9,300, why? Because price is at 9,293. So spread, I was expecting 350 to get, I am getting lesser. So I have just bet the, so there is a 600 point gap, 9,300 to 8,700, 600 point of gap. So here also I am getting near to 400 and here 380, so 20 rupees more, near to 18 19 rupees or 20 rupees I am getting. So all in all, the same things I am doing, but in a different way, because this 2/1 ratio long spread is not suiting to this requirement. So if I have done that, the till 8th May, you can find out this particular strategy is at a profit of 3255. So this both the things in a different way of implementation, having the same condition. I repeat, condition same, way of implementation different. So what is the condition of the first rule? When you form any ratio, call ratio or credit spreads call or put, that must give you minimum 75% of credit. And when you form to hedge this credit spread, when you form any ratio spread, 2/1 ratio spread or short or long, so that ratio spread should have a nature that buying side of the ratio spread, the two lots buy value, 80% of this two lots buy value must be recovered from the one lot of sell. So these two criteria, if you follow and implement this strategy will give you month on month basis profit, and The moment the single day rally or fall happens, you can take benefit of these things. Once the single day, though there is a, in this case what happened, the single day rally after the fall has happened. If it could have continued till 10,500, you could have seen a great profit in this trade. If it would have continued to the level of 10,500, then you would have seen a huge profit. You could have, it should not be 5,900, 6,000. It could have gone to 20,000, 25,000. So this particular strategy, have a look. Whenever you are encountering this kind of single day rally or a fall, implement it. Or if you encounter this kind of things and want to learn at that particular point of time, just to WhatsApp me, I will tell you which strategy to implement. So this also one of the great strategy you can implement. So there are three different area of tradings we are concentrating on. One, the intraday traders, those who used to speculate, having a very low probability of winning. Number two, a mature section of trader, those who believe on the trend, those who believe on the concept of money management or hedging. So that area I am talking about now. It is nothing, today's program is nothing about the intraday. So this is one of the beautiful concept you can able to implement in case there is a single day rally or fall happens. But that must be a single day rally or fall must be backing out that. Now coming to my third point, Jet score, using Jet score to do Nifty Bank Nifty pair trade. This is also I have taken on 14th April program. 14th April, there was a free program is being conducted, and those on that pair trade in Nifty and Bank Nifty 14th April. So this particular program recording also available in my YouTube. So I am referring to what are the things we have learned earlier and how far those learnings are useful. That I am repeatedly telling you. Based on VIX, we have calculated a bottom and top. I have demonstrated how it has validated. Now, this is also one Nifty and Bank Nifty pair trade concept you have learned on 14th of April. So much about that pair trade calculations and all I will not go through because that is already covered in this literature, and I'll show you how it has performed. So just have a look on this. Whenever that Z score goes to +2, near to +2 also, +2, we should buy Bank Nifty and sell Nifty. If it is goes to -2, near to -2 also, we will buy Nifty and sell Bank Nifty. Then hedge ratio will define how many lots we will buy and how many lots we will sell. So now coming to my Excel presentation, which are the days it has gone in the month of April. So in the month of April, so I'm just going for the 1st April onwards. You can see here near to 3rd April, it has gone to 1.87. So if you 1.87, so here hedge ratio, most of you will be talking about hedge ratio. So each one lot of Nifty, how many lots of Bank Nifty it should be bought or sold? That it has to be 2.13 ratio is there. That means 2 lots of Bank Nifty buy and 1 lot of Nifty sell can compensate almost equal to little 70,000-80,000 rupees difference will be there. Since it is 2.13. So here it is a plus 2 level, buying Bank Nifty 2 lots and selling Nifty 1 lot. And this +2 level is reducing to 0.9488 and it is again gone to 1.08, 0.52. 17th April, it is coming to a certain negative level. From positive, it has gone to a negative. So if on that day I see that what is the value of Bank Nifty and Nifty. I am finding out that 6 lakhs worth of Nifty what I have sold, it is 6 lakhs 95,000. 6 lakhs 90,000 worth of Bank Nifty which I have bought, it is 8 lakhs 27. So net profit of 48,562 rupees it is giving. So these two also it is coming to a near to level, minus near to level. So here Nifty must be bought, Bank Nifty must be sold on 17th April, and very next day it is negative 1.32, and 21st April it is coming to the positive range. So negative to positive migration happened. So here if you can close it, 29,486 you have made the profit in the April, month of April. And month of May, again 5th of May it has given a chance, 5th of May it has given a chance to buy Bank Nifty and sell Nifty, buy Bank Nifty and sell Nifty. 5th of May it has given. So currently it is 1.29. Very small profit will be there or small loss will be there. Once it comes to positive to negative, your profit will be optimal. So how it is being happening? So I have just taken, this is the past 1 year's data, past 1 year's test result says more than 80% of cases this particular pair trade given a success. Sometimes the waiting period is more, sometimes waiting period is less. However, all in all, it given a tremendous profit in this. And here how it happens, the closing price of Nifty is being taken, closing price of Bank Nifty is being taken. Then we have calculating one spread. Yes, Z score required a single data. So for that, I am just calculating the spread, logarithmic value of the Nifty minus the Bank Nifty price divided by the Nifty price into logarithmic value of the Bank Nifty price. This is how you can calculate a spread. You can use any other spread method also. So then I am calculating the average spread, past 10 days average spread, then standard deviation of P. So this is another part is required. Then Z score. Z score is what is your average spread, the actual spread minus average spread divided by your standard deviation. So this gives you Z score. So this, based on this Z score, if you go on doing the, so there are two opportunities it has given in the month of April. 14th of April we have a program that recordings you can find it out. So this is the two times we have got this. Say 3rd April, this chance if you have missed also. 17th April if you could have taken based on this concept, then this particular trade would have awarded you 29,486 rupees profit. And we do have also commission very good wonderful software. So here this scans the stocks based on their volatility ranking. It keeps the stocks into one group. These are the stocks in real-time basis it scans. These are the stocks giving you the volatility, rise behavior, falling behavior, no change behavior. Their correlation, Z score, everything comes here. Suppose Bank Nifty, you are getting here 1.3156. So if I just double click here, I can come to know Bank Nifty's current Z score. So if you just double click on any symbol, it is currently 1.0. It will try, it will take the real-time data feed from our server and tell you what is the Z score. So it gives you plenty of opportunity to trade in any future symbol with Nifty. It is being given, and in future enhancement also we are going to have the similar kind of things in the with the Bank Nifty with other sectoral index. So that also we will be adding soon. So this is also one of the, suppose if you want to do with the Nifty and Infosys, just click here. Infosys is negative here now, so negative here now. So it is same negative is there, 8081 level it is there. If you want to have with the Titan, so it is 1.55. So 1.55 means Titan must be bought, Nifty must be sold. So 1.22. So once it comes to near to, or you just go, so browse through this, you can get it whichever the counters is having near to. So here Maruti also is having a 1.8. 1.8 means Maruti must be bought, Nifty must be sold. Maruti must be bought, Nifty must be sold. Now it has come down to 1.49. So Monday, if it gives you opportunity, you can enter in that. Maruti you buy, Nifty you can sell. And contract value based on their hedge ratio, you can one contract how much you are buying. So make in such a way that you should sell in the similar way. So this is how the Z score works for defining your pair trade. So now someone was asking about the Reliance. So Reliance is coming under which segment? We have to first find it out. So here is the Reliance. It is rising volatility condition, but correlation is very poor, 30% of correlation. So 1.43, negative 1.43. Buying of Nifty and selling of Reliance is advisable based on this Z score 1.8 if it goes to 10. However, currently the correlation of this Reliance and Nifty is very poor. The reason Reliance is now news driven, and news driven the correlation is poor. So correlation above 60%, you can take a chance. The very idea of taking you to the past on 1st April, what we have learned, how far it has correct. So this should inspire you that at least let me go through this calculation once more and understand this, and in future I should use it. So the very idea of taking you to the pair trade past outcomes which has happened on 14th April to show how it has happened till April end is to inspire you that let me learn this simple mathematical calculations and take a call on that and take a analysis on that. Trend reversal date. Many of you have done wonderful works, and I will say you here, many of the people, many of you have learned these methods in a great way. So transparently, I have explained many times that a webinar has happened, and many of you have sent me the Excel sheet workings. So have a look on this particular month's trend reversal date. The first of May was a trend reversal day, though our market was holiday on that day, but SGX, Singapore Exchange, SGX was working on that day, and you have seen a great fall in the Nifty on SGX on the first Friday, and 30th of April also was very much open to you. So the first 30th of April was a great rise. So first trend reversal day, though our market was a holiday on that day, but SGX has given a great clue that that day Nifty fallen very badly. So 30th April, it was a uptrend day. First, it was a downtrend. Again, we have 10th of May was a trend reversal day. So which is falling on a holiday. So if any of our calculation falls in holiday, then the 8th or 11th should act as a trend reversal day. So 8th or 11th was a act as a trend reversal day. You have seen 7th we had a negative closing, 7th we had a negative closing, and 8th we have opened, gone to a great level, though positive closing was there. So it was not to the day's high point, but still that particular day, the trend reversal date worked perfectly. Now coming to the future trend reversal date, 26 and 28, these 2 dates for the Nifty, and high angle method is giving you 19th and 23rd. 23rd again coming in a holiday. So 26th, 22nd or 25th it is going to replicate it. So 19th, 23rd, 26th and 28th. So 19th, 23rd, 19th of May, 19th of May, 23rd of May, and 26th and 28th are the trend reversal date. So out of this, 23rd is a holiday. So 22nd or 25th will be working as a trend reversal day. If 25th act as a trend reversal day, the same trend will continue on the 26th because that is falling on the consecutive days. So this is for the Nifty. Going back to the Bank Nifty. So these two methods I am showing you because this method only has been taken in many of my webinars multiple times. So for the Bank Nifty, so first 10th, 26th and 28th, and here 10th and 7th. So there is a class here. So 10th is coming in the low angle, 10th also is coming in the high angle. So 10th and 17th. So 10th is already passed. So you can 10th already passed. 1 is the already passed. So 8th you have experienced. So you may not get on 11th the trend reversal on the Bank Nifty. So the future Bank Nifty trend reversal dates 17th and followed with 26th and 28th. So these are for the index. So now I am going to take for three different stocks I am going to take. So three different stocks I am going to take. So three different stocks I'll be taking, and this we can take. So Tata Steel is already there. So take Tata Steel, and I'll also take for the Reliance. I will also take for SBI. So here first 10th, 26th and 28th. So because of and 10th and 17th. So this is coming for the Tata Steel. No change from the Bank Nifty. Whatever the Bank Nifty has given, similar kind of things is giving the Tata Steel. So Reliance. So Reliance has come here. So here Reliance also has given a very peculiar. So 22nd, 27th. So as per this method, so again 12th is a trend reversal date, 26th is a trend reversal date, 30th is a trend reversal date, 22nd and 27th also trend reversal. So basically what we are going to do on the trend reversal day, can anyone will tell me what I am going to do on this 12th of trend reversal day? What I am going to do with the Reliance? Trend reversal happens, that doesn't mean that post 12 every day it is going to continue. It is not like that. 12th is a trend reversal day. So on that particular date, what way it is going to help me to take the benefit of this trend reversal date? How I will be get benefited? People are thinking that 12th is the trend reversal date and 12th I am going to take some action. Once the trend reversal date happens, then you do not have anything to do. So 11th, if it is a negative closing around 3:15 to 3:30. So this 15-minute period you will come to know that where it is going to close. If it is a negative closing, you will expect 12th there will be a positive. 12th there will be a positive. So hence what you need to do on 11th around 3:15 to 3:30, you should buy Reliance so that you should take the benefit on the 12th. And if you want to, like a BTST, buy today, sell tomorrow. So this is for the Reliance. Now we'll be going for the, I'll be going for the SBI, State Bank of India. State Bank of India. Reliance I have taken for Tata Steel, I have taken for Nifty, I have taken for the Nifty, and also I have taken for the Reliance. So 7th there was a trend reversal date, 21st was a trend reversal date, 2nd was a holiday. So 4th First and second was holiday, first, second, third. So fourth, the trend reversal date would have, you can experience SBI. 10th is also falling agent, so you can get 10th and 19th as the trend reversal date. So SBI also 10th, 19th, 7th, 21st. So out of this, 7th is past, 2nd is past. You can check it whether these 2 days has worked or not. 21st is the forthcoming. So 10th also was a trend reversal date. If 8th it has not worked, then 11th it will work. If 8th it has worked, then 11th you cannot get it. So 19th, 21st are the two trend reversal dates which is remaining now, and we can take benefit of. And if you want to learn this particular method of calculations, then you just visit my YouTube channel, and here if you can just scan trend reversal, if you can have a search GAN trend reversal, if you can have a search, all GAN related videos will come. So here the first video is predicting future high low time using GAN principle. This with exact calculations I have given this particular method. You can also procure the software, or you can do your calculations any way you want, you can do that. So this is the 4 different concepts you have learned. Experience it, how it is going to work in the GAN's trend reversal date is going to work for the month of May. Whatever the 4 counters I have taken, April Bank Nifty and Nifty pair trades performance you have seen. If you can construct a worksheet and just follow it for the month of May, you can able to get more clarity on that. I've given you a new way to use the VIX for calculating the immediate and resistance and supports after a single day rally or a fall. So that too also try to implement after you get the video recordings, and how this particular VIX concept worked, that also I have demonstrated. So we have done a program on 1st of April. That particular day, whatever the calculations we have done, how far that calculations come true. So we have taken a calculation. These are the reversal price points. This price point, reversal price point, means uptrend after touching these levels will get saturated. So if you take, this is our calculations, 746293. Actual calculation was 7511. 7511 was the actual thing which Nifty has accepted. If you can take this part into account, 9856 was a perfect reversal point, has worked here. So this concept try to utilize as much as possible so that you can get a great hand on technical tradings. So think beyond technical analysis, think beyond specific things. Whatever the, if you start thinking on VIX, many new things can able to come. During this period of the lockdown, I have come across many different ways you can use this VIX. Though certain things, after giving a proper shape, I will present in the due course of time. However, it is one of the fantastic parameter which can give you enormous information about the market. So this is the 4 different concepts you have learned, and the recordings will be given to you. And at last, I'll just take the weekly trends of Nifty and Bank Nifty using our Smart IT all-in-one tool. So 1 standard deviations. So what is the weekly trends? Weekly trends for the Nifty and Bank Nifty. Take the positional and 7 days time. So for coming week, what will be the Nifty and Bank Nifty's weekly trend? So this suggests that 9,300 above, if Nifty maintains, it has all chances to touch that 9,700. If it is falling below 9166, it has all chances to fall till 8765. All these pricing parts is been given here. So have a look and just follow next year, the next coming week. So what are the price points it is coming. So for Bank Nifty also, I'll do the same. So weekly trends we are finding out. These reports we used to give earlier. So now that particular report we are not able to give because of this lockdowns and other situations. So you can have a look at the Bank Nifty weekly trends. Bank Nifty, so 0.382 level is a trend confirmation point. So 19,560 above, all chances of 20,466, and 19,000 below, all chances of 18,094 rupees. This is the coming weeks weekly trends, and if it successfully penetrated the first cycle, it can go to the second cycle. So these are the all concept what you have learned. Is the time that you must keep it in writing, you must remember it, you must validate it as and when that forecasting comes true or it should not come true. So if it doesn't come true, then you must not accept it. If it comes true, you must have a strong conviction to accept it. To all of you, one small information to all of you. All of you are joining our programs for a long period of time. I'll request all of you to give a review in our Google page. So I'll just request all of you uh, to give a review in our Google page. The link I am sending to all of you, as well as the recording link where you can find out the recordings of earlier events. So earlier events, whatever I have shown you, that my YouTube channel and other things, whatever the earlier events has happened. So here, this using the VIX, what we have studied on the 1st April, 14th April, what we have studied. So all things GAN, using GAN, how we have calculated the trend reversal dates for the month of April. So all those videos are given in this particular my YouTube channel. That link I have sent to you, and I will request all of you, please give a review in our Google page. So that link also I have sent to you, because that encourages many people to join this kind of event. So I do not want that you must, whatever you have learned, whatever you have experienced, if it is true, then give a true review. So that is very important. So that is very important. So please give a review. So it will encourage many people to join the future. जो लोग गुजरात के रीजन के हैं, जो लोग the people those who are from the Gujarat region, we have Gujarat sales associate. So please contact me in this number. I will share his number. If you want any products and services, you can procure from him. So with this, I will be ending today's program. Thank you very much. Thank you for your time, and